Hello and good day. For today, our topic is Fundamentals of Securities Markets, Organization of Securities Markets. This is the second part of the discussion in Fundamentals of Securities Markets, and this is the continuation of the previous topic entitled Fundamentals of Securities Markets, Definitions and Concepts. Last time, diniscuss ko kung anong ibig sabihin ng market, ano yung mga types ng market, at ano yung mga characteristics of a good securities market. In this video, I'm going to discuss the organization of securities markets. Let's start with the organization of securities markets. In organization of securities markets, we will study the primary market, the secondary market, the third market, and the fourth market. Under primary market are corporate equity and debt securities, government securities, municipal bonds, and mutual funds. And under secondary market are exchange and over-the-counter market. Let's begin with the primary market. A primary market is where new issues of stocks and bonds are sold by corporations, national governments, and local government units or LGUs. Meaning to say, this is the market where the initial issue or first issue of stocks and bonds takes place. Dito nangyayari sa primary market yung initial or first issue ng stocks and bonds. Of course, yung stocks and bonds, these are owned by corporations, national governments, and local government units or LGUs. In primary market, corporate equity and debt securities are issued. I-review lang natin yung equity securities at debt securities. Ang equity securities, ito ay financial asset ng investor at equity ng issuer. Ang debt securities naman, ito ay financial asset ng investor at financial liability ng issuer. Corporate equity and debt securities are equity and debt securities of corporations. When corporations want to issue equity or debt securities, they usually hire investment bankers to underwrite their securities. In other words, they ask for the service of investment bankers or otherwise known as underwriters. At this point, you need to understand the word underwriting. Underwriting is the purchase of a new issue from the issuing corporation at a fixed price and the reselling of such issue to the public. In underwriting, yung underwriter, bibili siya ng newly issued securities. At yung newly issued na securities na binili niya from the issuer, yan yung ibebenta niya sa public. The underwriter purchases the securities from the issuer and then resells them to the investing public at a higher price. The difference between the selling price and the acquisition price is called the underwriting spread. Yung selling price, yan yung public offering price. At yung acquisition price, yan yung price or presyo nung pagbili ng securities. Acquisition price is the price of acquiring the securities or purchasing the securities. Of course, in order for you to compute for the underwriting spread, you need to deduct the acquisition price from the selling price. Meaning to say, selling price minus acquisition price, that is equal to underwriting spread. In primary market, government securities are also issued, such as treasury bills, treasury notes, and treasury bonds. Treasury bills, notes, and bonds are usually introduced in the market through auctions. Of course, kapag sinabing auction, merong bidding na nangyayari. Auction is basically the buying and selling of securities through bidding. Institutions bid for the yields and amounts that they want. Meaning to say, there is a competition between the institutions or among the institutions. But take note, in some countries, even individuals are allowed to bid. After all competitive bids are received, the government determines the stop-out yield bid based on the amount of money it wants to borrow. Kapag sinabing stop-out yield bid, ito yung highest bid na gusto o kailangan ng government. Stop-out yield bid is the highest bid the government wants to accept. So as you can see, in competitive bids or competitive bid, yung highest bidder ang mananalo. But sometimes, the government also accepts non-competitive bids, which are awarded on the basis of the weighted average of all winning competitive bids. So, magkaiba sila ng basis. Yung competitive bids, these are based on the amount of money the government wants to borrow. But in non-competitive bids, they are based on the weighted average of all winning competitive bids. But take note, in most cases, the bids are competitive bids, and the highest bidder wins. In primary market, municipal bonds are likewise issued. New municipal bonds are issued in one of three ways. And what are these three ways? First, competitive bids. Second, negotiated sales. And third, private placement. What is the meaning of competitive bids when it comes to municipal bonds? Competitive bids usually involve sealed bids where the bond issue is awarded to the underwriter with the lowest interest cost. Of course, municipal bonds carry interest. That's why municipal bonds are issued to the underwriter with the lowest interest cost. As you can see, in competitive bids, there is a competition between the underwriters or among the underwriters. And the underwriter with the lowest interest cost will win. Negotiated sales typically involve contractual arrangements between the issuing local government unit and the underwriter. Meaning to say, there is a contract between the local government unit or the LGU and the underwriter. Merong meeting of minds ang local government unit at underwriter. That's why tinawag na negotiated sales. Tinawag na negotiated sales because there is a negotiation or arrangement between the local government unit and the underwriter when it comes to the selling of municipal bonds. The underwriter helps the issuer prepare the bond issue and set the price and has the exclusive right to market the issue. This means that in negotiated sales, only the underwriter is allowed to market the issue. Private placement is the sale of the bond issue directly to investors. Meaning to say, in private placement, there is no intermediary. Ibebenta yung bonds directly sa investors. And take note, in private placement, investors are generally institutions. So in most cases, ang investors dito sa private placement ay institutions. Mutual funds are also included in primary market. When we say mutual funds, these are pools of money collected from many investors for the purpose of investing in stocks, bonds, or other securities. Mutual funds are owned by a group of investors and managed by professionals. In other words, kapag sinabing mutual funds, these are collections of securities owned by a group of investors and managed by a fund manager. Closed-end investment companies issue their shares much like ordinary corporations issuing new shares. They make use of underwriters to sell their shares during an offering period. Recall that when corporations want to issue their securities, they usually hire investment bankers or underwriters to sell their securities. Similar to the corporations, closed-end investment companies also ask for the help and service of underwriters in order for them to sell their securities. Open-end investment companies, however, are unique in that they continuously sell new shares every day through various distribution outlets such as brokers, dealers, financial advisors, and salesmen. So as you can see, closed-end investment companies make use of underwriters, while open-end investment companies make use of intermediaries such as brokers, dealers, financial advisors, and salesmen. Next, secondary market. A secondary market is for securities that have already been introduced in the marketplace. So what is the difference between primary market and secondary market? Sa primary market, yung securities ay newly issued. Pero sa secondary market, ang securities ay hindi newly issued. Meaning to say, in secondary market, the securities have already been issued. The securities that are traded in secondary market have already been issued in the past. Therefore, secondary market plays an important role in providing liquidity for investors, particularly for those who initially purchased the securities in the primary market. An example of secondary market is exchange. An exchange is a centralized market for the secondary trading of stocks, bonds, and other securities. The issue must be approved for listing before it can be traded on an exchange. Meaning to say, merong approval process bago mabenta at mabili yung securities doon sa exchange. Most countries have a single securities exchange, but in more advanced markets, there can be one or more national exchange and several regional exchanges. In the Philippines, the exchange is called as Philippine Stock Exchange. Another example of secondary market is over-the-counter market or OTC market. Over-the-counter market is the market for securities that are not listed on the exchanges. In other words, in over-the-counter market, the trading of securities does not happen on exchange. The securities are traded outside the exchange. Actually, the broad definition of an OTC trading is a transaction that is not consummated on an exchange and therefore includes third market transactions. As I said earlier, the trading of securities in over-the-counter market does not take place on the exchange. Next, third market. The term third market describes the over-the-counter trading of securities listed on an exchange. So what is the difference between over-the-counter market and the third market? In over-the-counter market, the securities that are traded are not listed on the exchanges, while in third market, the securities that are traded are listed on exchanges. Take note that in some countries, just like the Philippines, trading of securities listed on an exchange is not permitted. Meaning to say, all trades of listed securities must be coursed or happen through the exchange. So it follows that in the Philippines, all trades of listed securities must be coursed or happen through the Philippine Stock Exchange. And last, fourth market. The term fourth market is used to describe the direct trading of securities between two parties without broker intermediation. Broker is someone who buys and sells securities for the account of others. As you can see in fourth market, the securities are traded without the help of intermediaries such as brokers. In other words, one party sells the securities directly to another party. That's why tinawag na direct trading of securities kasi nga directly na binibenta yung securities sa isang party or vice versa, directly na binibili ng isang party yung securities from another party. And that concludes the discussion in Fundamentals of Securities Markets, Organization of Securities Markets.